BHP Billiton has reported a strong year of production with two of its major assets, Western Australia Iron Ore and Escondida, exceeding production guidance. For a look at the mining space and a forecast on tomorrow's Anglo Update, we speak to Peter Major at Katie's Corporate Solutions. Thanks so much for joining us, Peter. The last time I spoke to you was some time back and you were very negative on the resources outlook. Are you a little more positive and taking into account some of the major news flow that we heard out of BHP Billiton today?
Yeah, very much, Bronwyn. I think we had this huge fall in a lot of commodity prices over the last 3 months. And it seems to have found a pretty solid bottom, and most of the commodities have come up a little bit, and they've worked their way up very progressively, very confidently. So these are production increases. I suppose we expected them, but we're having a better metal price environment than we were looking at a month or two ago. And we've got weaker currencies in Australia and South Africa, and that really benefits these companies. So yes, I'm quite a bit more positive than I was a month or so ago.
Peter, it's Ashraf here. What I found interesting is that their production has gone up, but I see that some of the other iron ore mines in Australia have actually started cutting back on production. Do you think it's just the clients for BHP that they've sourced that has helped production kick up, or do you think the other mines are just running at losses at these low prices?
Look, my off-the-cuff thinking is we've seen massive capex for the last 5-6 years on these big mining companies, and they got easy access to money. They got access at good rates, all the money they wanted, and we're seeing big write-downs because too many of them spent too much money inefficiently. The fact is they threw a lot of money at new projects. So this is inevitable that these production increases are coming, but we're only going to see in the next 3 months, 6 months, 12 months how much these companies have really paid to get these kind of production increases. And a lot of people are thinking, hey, rather than spending billions, if you would have saved that money, given it to shareholders, and maybe made your operations more efficient, you could have made as good a profits, better margins with less volume.
Are we seeing any significant change in how BHP Billiton, or the BHP Billiton ship rather, is being steered, i.e. life after Marius Kloppers?
Yeah, we are, Bronwyn. Right from the start, Mr. Welsh said, we're going to worry less about production. We're cutting a lot of forecast production back. We're cutting a lot of planned capex back, and we're even cutting ongoing capex back. So he really set the tone that we're not looking forward to these grand projects and big spending. We're looking for cost savings and eliminating capex where we didn't think that was going to have a real high rate of return very quickly. And all they have to do is look at Anglo American and Brazil. There's a strong lesson for everybody what this capex can give you. Bad news.
Peter, from what you've said, does that mean that BHP is going to hold back on any acquisitions in the foreseeable future? Because Marius Kloppers was quite aggressive going into different areas.
You know what? I think they're going to be more opportunistic. I think it's the largest mining and resource company in the world, and they got burned chasing acquisitions, but they didn't get burned as much as the other people because they were less successful. I think they had 2 out of 6 deals go through, whereas the other people had 5 out of 6. So yes, I think they're not really out there looking for acquisitions that I know of, but if some deals come up, I think they'll consider it. And that's the way it should be. You should be opportunistic. You should look at the other people taking a lot of pain, and then you can probably get good deals. You know, there's rumors going around that Anglos will be happy to get a partner in at Minas Rio at 0 cost. Just give the person half to come in. And that's a lot better than paying 4, 5, 6 billion. So I think they're going to be opportunistic if they see a good deal. But otherwise, there's no indication they're looking to make any acquisitions.
Recently on Hot Stocks, I was chatting to Sasha Narishkin about BHP versus Anglo American. BHP, in his book, clearly the winner from an investment perspective. Let's push you on your thoughts on that front. Weigh them up against one another.
No, I think he's correct, Bronwyn. I think the risk is much lower. And if you say, what is Anglo American geared to? What do they need to really fly? If the iron ore price shoots up tomorrow, and it's already pretty high, it doesn't do Anglos that much good because their big project won't come online for 2 or 3 more years. Billiton will get an immediate kicker from that. So the rating of Billiton, it's almost as low as Anglo's. I think its overall profit margins are higher. It doesn't have this massive black hole draining money. It doesn't have a problem like Amplatz. It doesn't have a imponderable like De Beers. So with the ratings where they are now, I would definitely have a lot more Billiton than Anglos.
Ashraf, are you with Peter and Sasha on this front also? Are we going for BHP over Anglos in your book?
I would definitely, given that BHP's rating has come down quite significantly. It's always had a premium rating relative to Anglo, and that rating has certainly come down. So that would be my preference. And for the second reason, the wage negotiations here with the mining companies. I mean, Peter's mentioned Amplatz is a big exposure for Anglos, and I don't think an investor can afford to sit on that risk.
You're breaking Mark Kutafani's heart, gentlemen. You've got to give him a chance here. Anyway, let's move on to Peter, you want to comment on that? Do you think Kutafani can turn Anglos around?
I think it can, but it's going to be slow, expensive, scary, difficult. I don't know who could turn it around any quicker than Mark. It's just going to be long and hard no matter who gets that job.
All right, let's go a little more general. Look at China again. We can't talk about resources without looking at that China impact. And recently, obviously, that second quarter GDP number coming out at 7.5%. Still very robust. But there are a number of forecasts coming in which are saying that we're going to see a slowdown to round about that 6% level out of China from a growth perspective. Is that, in your opinion, a hard landing, or are we still in soft landing territory?
Gee, I think it's marvelous. I think if China stays above 5, the world better go to church twice a week and say, thank heavens. Sure, anybody who thinks, oh, we've fallen from 11 to 7 or from 10 to 5 and 6, they can cry and slam the door all they want, but that wasn't real growth. That was, that was low cost debt, money printing inflated growth. So yes, I would be personally very happy at 5-6%, and I think most of the world would. If China goes for that 3-4 more years, geez, they probably kept capitalism afloat that much.
I also want to throw forward to hot stocks this evening, Peter. I'll be discussing Impala Platinum, Anglo Platinum, Lonmin, and the New Gold Platinum ETF with Paul Turan, and also with Viv Govender. And across the board, I don't want to give away the show, but across the board there was a pessimism around the platinum stocks. This is a no-go area from an investment perspective, from Paul's perspective right now, and from Viv's perspective. And if I use perspective again, I'm going to shoot myself. But what is your perspective?
Hey, mine's been Lonmin all year, and I'm not deviating. I think Lonmin took a lot more pain sooner, and they were able to make the changes needed. And Lonmin is a smaller ship to steer. So without a doubt, I think Lonmin's going to be the best platinum out of those 3 big ones. In fact, I think Lonmin's even going to beat Aquarius and Northam. So I'm sticking with Lonmin for the rest of the year.